Hi everyone, welcome back to Saheb Academy. Today in this video we are going to discuss about prepaid expense, an adjusting entry that we pass at the end of accounting period. And this prepaid expense is also known as deferred expense, unexpired expense and expense paid in advance. Okay, lots of different names are there, so you have to know all of them so that when you see in any book or online anyway, then you can understand they are referring to prepaid expense only. Is that clear? Okay, so now in this video we are going to discuss this concept in very much detail with a huge example that will span 3 accounting periods. So we'll see what's the backstory that happens, how the bookkeeper or the junior accountant record this event, this transaction, and then what adjustment is required by the senior accountant at the end of accounting period, and he or she will pass the adjusting entry, and then on the opening day of the next accounting period the reversal entry, and so on for all the next 2 accounting periods, right? So we're going to see that practical example and you will be completely clear with the concept of prepaid expense. But before going ahead with this prepaid expense, first you should watch the conceptual video of adjusting entries where we have discussed each and everything related to this, right? Basics of financial statements, and then the accounting cycle, how adjusting entries fit in over here, what's the process, everything we have discussed, and then different types of adjusting entries. And I told you popularly adjusting entries are just 4: outstanding expense, prepaid expense, accrued income and deferred income, and we are focusing on this, isn't it? Yeah, see here, these 4 major popular entries, right? So we have already covered outstanding expense with the example and everything in the previous video. Now in this video we are covering prepaid expense, right? Prepaid expense is also part of what? Prepayment. It's also called as prepayment, right, in this category. Fine. Okay. And then we discussed about accrue and due, these 2 accounting terms. What's the difference between these 2, right? And we took this small example to understand that. Yeah, that was the first video, right, of adjusting entries, conceptual video. And then in the previous video we understood outstanding expense, right? Outstanding expense. So you should also watch this. Yeah, this is discussed in very much detail. We have taken a huge example, of 3 pages actually, this example. And then we have discussed about open transactions also. Open transactions are the reason why we have mostly accrual or prepayments. Okay, so that's the thing. Now let's get back to the prepaid expense. Okay, if you want to watch those videos, then I'll put the links in the description below of a conceptual video and outstanding expense. Now let's get back to this prepaid expense. Now see here we have the concept of prepaid expense. It's really simple and straightforward. You already know prepaid expense is also known as deferred expense, unexpired expense and expense paid in advance, right? Yes. And prepaid expense is an adjusting entry that is passed at the end of accounting period by the senior accountant. And then right in the next accounting period, what will happen? On the first day, a reversal entry will be passed to reverse this adjusting entry, isn't it? Yes, that's what will happen, and that's what we are focusing on. That's what we are learning in this video series of adjusting entries. Yes, yes. Now you have to understand one more thing. See, the senior accountant will pass the adjusting entry only after getting to know the backstory, what has happened in the current accounting period, how the transaction or the event has been recorded by the bookkeeper or the junior accountant or the cashier who have limited knowledge. How they have recorded the transaction. Based on that only, after learning that only, senior accountant will pass correct adjusting entry. Is that clear? So for us also it becomes very essential to understand the backstory, what has happened, how we'll pass the adjusting entry based on that. Is that clear? Okay. So first let's understand the meaning of prepaid expense. It's really simple. Prepaid expenses are expenses that have been paid in advance. Company will pay it in advance. Okay, cash will decrease in company because of this event, and a prepaid expense has happened. Okay, what does that mean? It means that we have not taken any benefit, we have not consumed any economic benefit, we have just paid the money. Okay, see here, Prepaid expenses are expenses that have been paid in advance but have not been incurred. Have not been incurred means we have not taken any economic benefit. For example, let's just say we started a company in this accounting year. Okay, we took a new office, right? So on the first day, our landlord asked us to pay 3 months rent in advance, and we paid that. Okay, expense paid in advance. We all know rent is a what? Rent is an expense. So we paid 3 months rent in advance on first day of the year. First day of the year, let's just say. Okay, and let's just say we prepare financial statements monthly. Okay, every month. Is that clear? All right. So now our first month is what? Is an accounting period. First accounting period. Second month will be second accounting period, isn't it? Yeah. So now we have paid rent on first day, and we have not taken any benefit on the first day. I'm talking about, we have not taken any benefit. We have just took up the office, right? We haven't done any operations in the office. We have not earned anything through that. We have not done the operation and generated revenue, nothing, right? So on the first day, this entire rent will be what? Prepaid expense. But let's just say a month has been passed. A month has been passed. After a month, at the end of the month, at the end of the accounting period, what has happened? We have taken the benefit of the prepaid rent by 1 month. We have consumed the benefit by 1 month. So that 1 month rent out of the 3 months which we paid will become our expense. You have to understand this. That will become our expense. Understand this. Benefit has been consumed. Okay. We have done our operations in this 1 month. We have did all the business, earned the revenue, right? So economic benefit is consumed. We have utilized that space. So that became our expense. And this expense will go where? In statement of profit and loss, or income statement, or profit and loss account, you can say, if you're talking about single owner business, right? What about the remaining 2 months rent which we have paid? Those rent, that money which we paid, of course cash is decreased, yeah, but that is not our expense right now. Right now we are at the end of first accounting period. Yeah, here we have not consumed any economic benefit of those 2 months rent which we have paid. They relate to future accounting period. So this will be called as what? Prepaid expense. This will be called as prepaid expense. Why is that so? Because economic benefit is not consumed. We have paid this amount to the landlord. Okay, cash is decreased in our company, but we have not taken the benefit. We are yet to receive the benefit, right? We will do the operation in the next month and then the month after that, right? In those period, we will recognize those as our expense. But right now at the end of first accounting period, this will be future expense, which is called as prepaid expense, and in reality that would be an asset, an economic benefit that we are yet to receive. We have not received it. We will receive in future. So that is our asset, a current asset, if you are going to receive it in the next 12 months. Is that clear? And this asset should be shown in balance sheet. Is that clear? This is what should happen. Whatever amount of money is paid in advance, right? It has to be bifurcated properly. Whatever that relates to current accounting period, that will become expense, because at the end of accounting period we'll consume that much. But the remaining, which relates to future accounting period, which we will not consume, that will be called as prepaid expense, and it has to go in balance sheet as an asset. Okay, this is what should happen. But you have to understand what happens in practical life. What's the real world scenario? Real world scenario is, see here, the bookkeeper or the junior accountant or the cashier, they just do routine transaction. They don't have proficient knowledge, right? And they don't have time also to focus on these details, right? And their advice, you just focus on routine transactions. Don't do accrual and prepayment adjustment and all. You will mess up everything. Senior accountant advise them like this. Just focus on receipt payments and routine transactions. So they will see, bookkeeper who has limited knowledge, he will see, okay, rent is paid of 3 months and cash is decreased in my company. Cash is my asset. I will credit that. Okay, he credited the cash account, which is completely right. And he will say rent is an expense. We have paid 3 months rent. That's fine. So I will, debit the expense account, rent account, debit. Okay. So this is the double entry or the journal entry he has passed. Who? The bookkeeper. And this happened on 1st April. This happened on 1st April, on the first day when the payment was done to the landlord. Is that clear? Now you have to understand here, what did the bookkeeper or the cashier or the junior accountant has done? he has debited the entire 3 months rent as an expense. Is that okay? It's not okay. Why is it not okay? Because understand, the expense is only of 1 month. The remaining 2 months are what? Prepaid expense. It's an asset, right? The correct entry should have been what? The correct entry should have been expense account 1 month rent, prepaid expense account debit 2 months rent, and then to cash account. Cash account will be 3 months rent because money has decreased by 3 months. There is no doubt in that. He was supposed to bifurcate that, but in real world this doesn't happen. The bifurcation, the correct entry of accrual and prepayments and all will not happen by the normal bookkeepers. Okay, so this will be the position. I told you, right, in explaining the concept of adjusting entry, also see here, bookkeeper or cashier, they will not follow the accrual and matching concept. Yeah, he did not follow the matching concept, isn't it? He debited the entire expense account. Yeah, all 3 months rent has been debited over here. He was just supposed to debit 1 month's rent. Because of this, what will happen now? In trial balance there will be 3 months rent, which is not correct. In statement of profit and loss, you will only take whatever expense that has been incurred in this. Yeah, only 1 month rent has been incurred over here, so only 1 month rent has to go in statement of profit and loss. But this guy, bookkeeper, has debited 3 months rent, so 3 months rent will go in statement of profit and loss. But it will not happen actually. Senior accountant will come while seeing the trial balance and he will pass an adjusting entry. Okay, is that clear? So see, I told you they will not follow the matching and accrual concept 100%, right? Because the accounting process is designed like that. They just focus on day-to-day routine transaction and they record everything in a lump, all together in entirety they record. Is that clear? Yeah, see, he recorded everything in entirety in a lump. All the 3 months rent has been debited to expense account only. That's a problem. So what will happen? Senior accountant will come, he will see the trial balance. 3 months rent is showing in the trial balance. He will see, oh, I know the rent agreement. Yeah, he will take out the rent agreement. He will see, okay, this is not 1 month rent. Yeah, this is not the rent of 1 accounting period. This is the rent of 3 accounting periods. So what he will do? He will, reduce the expense account by 2 months rent. And that 2 months rent he will record as an asset. What should happen? Okay, see here. Senior accountant will pass an adjusting entry to record prepaid expense of 2 months rent and reduce expense account by 2 months rent, because already expense has been debited. So expense account has to be credited, isn't it? This entry will be passed. Prepaid expense account debit. Prepaid expense is an asset. Debit balance. To record, you will have to debit. It's increasing. Fine. 2 months rent will be debited and 2 months rent will be credited to expense account. Yeah, expense account, here it was debited by 3 months rent. So here you are crediting by 2 months rent. So only 1 month rent will go in statement of profit and loss. Okay, 2 months rent will be decreased over here. Expense account has debit balance. When you credit it, it decreases. Is that clear? Okay. And then in statement of P&L, what will happen? What is the treatment in financial statement of this? This is the double entry you pass. But if you want to directly do the adjustment in P&L, then what you have to do? You have to find out where there is rent, right? From the rent, you have to reduce 2 months rent, reduce from expenses. Okay, prepaid expense is reduced from expenses. Is that clear? In statement of P&L. Don't worry, we'll see this happening in the example. And in balance sheet, what we have to do? We have to show prepaid expense 2 months rent as a current asset. Is that clear? This is the idea. This is the entire logic. Fine. You understood this? It's really simple and straightforward. Okay, now let's just go to an example. Okay, and then with that example, you'll be perfectly clear. You will see how the entire process is happening, right? And we have 3 accounting periods over there. Same rent example only, but it's illustrated properly. Okay, let's just go to the example now. Now see here, we have a beautiful example on prepaid expenses. It's really simple and straightforward. And this example is spanning 3 accounting periods, 3 years, as you can see, first year, second year, third year, or you can say first accounting period, which starts from 1st April 2023 and ends on 31st March 2024, 12 months. Okay, and then second accounting period ends on 31st March 2025, and then third accounting period ends on 31st March 2026. Okay, so here we have 3 year ends, as you can see. So what are we going to do over here is we'll be passing adjusting entry and reversal entry. You all know adjusting entry is passed at the end of accounting period and then reversal entry or reversing entry first day of the next accounting period. Is that clear? Okay, so let's begin the example. See here, let's just say for example we have started a new company and we need a new office. So we took up a new office on rent, and our landlord asked us to pay the rent of 3 years all at once in the beginning only. On 1st April 2023 we paid rent of 36,000. okay, so this 36,000 includes what? Rent of current year as well as rent of future years. Is that clear? Rent per year is only 12,000, but we paid 36,000, 12,000 of this year, second year, third year, all together. So this is called what? Expense paid in advance, prepaid expense. Is that clear? Okay, so on 1st April 2023 what happened? Let's just see the backstory. Yeah, first year the bookkeeper recorded the transaction like this. See here, 1st April 2023, rent account debit to cash. He treated entire payment of this, entire advance payment, this expense payment, as purely expense only. Rent account debit to cash. Cash has been decreased. He credited the cash and he debited the rent account. 36,000, 36,000. I told you now, this is what will happen 99% of the time. Okay. Bookkeeper will usually record the entire amount paid as an expense. This entry he has recorded, rent account to cash. Yeah, in this rent account, in this expense account, there is what? There is expense as well as prepaid expense. Both the elements are there in this. Is that clear? So then what will happen? Then ledger accounts will be prepared, right? Ledger posting will happen, and then trial balance will be prepared. Bookkeeper will do this. In trial balance he will take the rent balance 36,000 from the ledger, 36,000. Then the year will be ended on 31st March 2024. Okay, senior accountant will come to prepare financial statements. Before preparing financial statements, he will review the accounting records. He will prepare the worksheets. Any rectification is there, then he will pass the rectification entries in the journal proper or the general journal, and then he will see the trial balance also. He will see rent is there. Okay, 36,000 is there. He will think, I know from the rent agreement that our rent per year is 12,000. So only 12,000 should appear over here. Why 36,000? Then he will see the transaction that we have paid rent in advance. 3-year rent has been paid in advance on the first day itself. So he will come to know, okay, that's why the junior accountant has done like this. Yeah, this sort of entry. Entire payment has been treated as an expense of current year only by debiting the rent account. So what the senior accountant will do? Senior accountant will have to pass an adjusting entry. Okay, what adjusting entry? In the conceptual thing we have discussed over here, prepaid expense to expense. Right now we are talking about rent, so prepaid rent to rent. Okay, if it was electricity bill, then prepaid electricity bill to electricity account, like that. Is that clear? So here we are talking about rent, so prepaid rent to rent. Now we have to understand the logic. What is happening in this entry? Logic is really simple. See here, out of this 36,000, only 12,000 relates to the current year. So 12,000 is the expense, that's right. But remaining 24,000 relates to future accounting period. So that much you have to delete from the expense account. You have to remove, you have to decrease, right? So how will you decrease or how will you remove? How can you do that in accounting? You do that on the basis of debits and credits. Rent account is an expense account. It's 36,000. You want to decrease it by 24,000. So you will credit the expense account. You will credit the rent account to rent 24,000. 24,000 value has been removed from rent account. Is that clear? Simple and straightforward. You will debit that same value in prepaid rent account. Why? Because you want to record on the last day over here that, we are supposed to receive 24,000 worth of benefit in the coming years, right? You have to record it over here in the balance sheet as an asset, future economic benefit we are going to get in the coming years, so that correct financial position can be communicated to the stakeholder, to the users of financial statement, right? So prepaid rent, this asset has been recorded. So now what is the effect of this? Let's just see. First, what we will do is, first we'll prepare always a T account, a ledger account of rent, okay, of an expense. See here, rent account, okay, this is T account or ledger account we call this. This remains in the general ledger, right? So here, see, rent account has debit balance. So debit means plus and credit means minus. So first what happened, first the bookkeeper recorded this entry. He recorded the rent, increased the rent. Rent account got debited because of that cash payment. Rent account got debited, yeah, it got increased because of that cash payment, 36,000. Then the bookkeeper came to know we have to reverse 24,000 from the rent account. Yeah, we have to decrease 24,000. So rent account decreased by 24,000 because of prepaid rent. Is that clear? This 24,000 went to prepaid rent. Is it clear? Okay. So these are the two postings only that happened in this current accounting period. Then we'll balance this 36,000 here. So this is the bigger side, 36,000 on both the side. 36,000 minus 24, that's equal to 12,000. So 12,000 should hit profit and loss. You all know that expense and incomes account always gets closed and the balances gets transferred to profit and loss account. So this is what is happening. 12,000 balance will hit profit and loss account. This 12,000 will appear over here in profit and loss account, right? So you see, right now correct expense has been recorded in profit and loss because of this adjusting entry. Yeah, we have deleted 24,000 from over here, so only 12,000 went in profit and loss. If you are not doing the T account, why do we do the T account, this ledger account? Because to calculate how much will hit profit and loss, the balancing figure will hit profit and loss directly, we can get this. But if you don't want to do this directly, you want to do the adjustment in profit and loss, then how will you do it? You will see in the trial balance 36,000 rent is there. Yeah, you will take that rent 36,000 in the inner column, and then prepaid is there of how much? 24. You know na, you are right now over here senior accountant, 12,000 is of future years, so 24,000 is prepaid. Yeah, you know that. So 24,000 you will subtract. Yeah, in the final accounts questions or financial statement questions below, in the additional information they will give over here prepaid rent 24,000, right? So from there also you can get prepaid rent 24,000. 36 minus 24, that's equal to 12,000. Is it clear? So what happened? What is the impact in profit and loss? Tell me. The impact is expenses have decreased. Yeah, first it was 36, because of the adjusting entry it got decreased, expense got decreased to 12,000, which is the correct expense for this period. So correct profit will be calculated. So if expense is decreasing, that means if there is profit in this accounting period, profit will go up. If there is loss in this accounting period, that means loss will come down. Is that clear? Simple. Understood. We understood the impact in profit and loss. And then in balance sheet, what will happen? I told you in balance sheet what will happen. In balance sheet, you have to show prepaid rent as what? As a current asset, right? Because you are going to receive benefit, economic benefit in the future. So that's an asset. So prepaid rent 24,000. Now here this is not be a current asset completely. 12,000 current, 12,000 non-current, because 12,000 will be received in the next accounting period, the benefit, and the remaining 12,000 in the after 12 months, right? Because right now we are over here. So yeah, but entirely it's asset only. Is that clear? So total asset will go up in balance sheet. Is this clear? Simple and straightforward. Yeah, both the things you understood. Fine. Now let's move on to the next year. Yeah, 31st March 2024 over. After this, new accounting period will start 1st April 2024. Over here, what you have to do? I told you, right after the adjusting entry, you have to pass reversal entry or reversing entry, right? So let's just pass that. Second year, reversing entry. How will you pass the reversing entry? Exact opposite of adjusting entry. See, prepaid rent to rent. So what you will do? Rent account debit to prepaid rent. Exact opposite. And the same figures only. Rent account debit to prepaid rent. 24,000, 24,000. What's the logic of this? The logic is, see, we passed the adjusting entry just to prepare financial statements. Prior to preparing financial statements, financial statements are prepared. The purpose is over. Correct profit has been calculated. Accurate financial position has been shown to the stakeholders. Okay, everything is communicated properly to stakeholders. Our purpose is finished of adjusting entry. In the next accounting period, we pass the reversal because see, prepaid rent will be cancelled. This prepaid rent is there, right? It's existing right now in the balance sheet. It exists in the accounting books. This 24,000 has debit balance. You have to cancel this. So you will credit. That's the logic. By crediting, you are cancelling it. Prepaid rent will be cancelled. And then rent, you will record. Rent here, you will record. This is an expense account. You are debiting it. It means you are recording it. Okay. You will come to know the reason behind this. See, it's really simple. Okay. So you understood reversal entry happened on first day of the new accounting period. then here there will be no payment happening of rent, because already rent has been paid off this year. So no payment will be happening. The bookkeeper or the junior accountant will not pass any payment entry because no payment has happened, right? So see here, no rent will be paid in this year because the rent of this year is already paid in previous year. Yes, so no journal entry, no payment entry, right? So then what will happen? Bookkeeper will prepare the rent account. Okay, in rent account he will take this 24,000. Okay, and this 24,000 as a balancing figure will hit where? It will hit trial balance. Okay, rent 24,000. Then the senior accountant will come. See, again the year end has come. Okay, no payment entry happened over here, and then the year end has come. At the year end, senior accountant will come and see that, you know, rent has been recorded over here 24,000, which he only did. Fine, he passes adjusting entry because see, rent got debited over here because here there will not be any rent entry being passed. So if this rent was not debited over here, then completely rent expense would have been missed. It wouldn't have been recorded by the bookkeeper because no payment entry, no recording. Is that clear? So that's why this rent was debited. Fine, then it appeared over here in trial balance. But the senior accountant will come to know, see, 24,000 is not right. Yeah, out of this 24,000, only 12,000 relates to this year, this second year. Remaining 12,000 in this 24 is of future year. So what I have to do as a senior accountant? As a senior accountant, in this 24, 12,000 I have to record prepaid expense. Okay, an asset, and the remaining 12,000 is what? Expense proper. So then I have to reduce the expense also by 12,000. Is that clear? Two things he has to do, isn't it? So let me just show you. He will have to pass an adjusting entry. Which adjusting entry? This prepaid rent to rent. He has recorded 12,000, that in future, in the next year, we will receive economic benefit of 12,000. Yeah, isn't it? We will use up the space, that office, and we won't have to pay any rent because it's already paid. Benefit will be received in the next month, in the next year. Okay, and rent which is there, the value in this 24,000, that also have to be decreased, right? This can't be 24, so rent account will be credited. Rent account will be credited 12,000. This is the adjusting entry passed at the year end. At when? At over here. Okay, is it clear? Fine. Now after this, what do? Financial statements are prepared, right? See here. Before that, we prepare what? T account of rent account, so that we can get to know how much will be transferred to profit and loss exactly. Fine. So how do we prepare this? See, there is a shortcut to prepare this. Let me just show you. Okay, format of expense ledger account. See, format of expense account with maximum adjustment of outstanding expense and prepaid expense. Okay, accrual and prepayments. So how do you do this? See, it's really simple. This is a debit balance account. Okay, normal balance is debit of this account nature. So debit means plus and credit means minus. Is that clear? Plus minus, plus minus. Fine. So whenever there will be payment happening, yeah, expense has increased and payment has been done. Payment will always appear on the debit side, and profit and loss balance will always appear on the credit side. Is that clear? Okay. Then outstanding expense, we already know from the previous video that outstanding expense has credit balance. It is a liability. Liability has opening balance on credit side. Yeah, whenever you prepare any liability accounts, opening balance will be there on the credit side, closing balance will be there on the debit side because it has credit balance. Fine. Now if we talk about prepaid expense is an asset. Okay, so opening balance will be on the debit side and closing balance will be on the credit side. And you have to understand, opening balance causes because of reversal entry and closing balance causes because of adjusting entry, because this happens at the year end. This happens at the beginning of the year, first day of the accounting period. Now let's just see how it will happen practically. See here, rent account, debit balance, debit means plus, credit means minus. Fine. So first, what happened over here? First, see, in the second year, this reversal entry was passed. So here what happened? Rent account got debited. Rent was recorded. It increased by 24,000. Rent was increased by 24,000. Because of what? Because of the prepaid rent. Yeah, reversal entry, prepaid rent. Is that clear? This is how you do the posting. Fine. And then we pass adjusting entry at the year end. This one, 31st March 2025, right? By prepaid rent 12,000. How? See, rent got credited because of prepaid rent. Rent got credited, which means it is decreasing. You're decreasing the rent, now you decreased it, isn't it? You said here 24,000 is not right, only 12,000 should be there. So you credited the rent account. Rent account got credited because of prepaid rent. Fine. So 24,000 on the debit side, which is bigger. So 24,000 on both the sides. 24,000 minus 12,000, that's equal to 12,000. This much should hit profit and loss. And this 12,000 has come over here, 12,000. Is that clear? And this is the closing balance of prepaid rent. Fine. Closing balance. Closing balance is caused because of adjusting entry. Is that clear? And you have to understand this format properly, okay? In this question here, there was no payment. That was, there is no cash or bank over here. Yeah, because it was already paid in the previous year. That's why no payment is happening. So no cash or bank entry. And then outstanding expense is also not there. Is that clear? So you understood the format of expense account now with maximum adjustment. Okay, fine. And then let's just say if you're not preparing this, directly doing adjustment in P&L, that also you know. You take rent account balance from trial balance over here, 24,000, right? And then you deduct prepaid rent, 12,000. Yeah, this will be available in the additional information in the practical questions. 24,000 minus 12,000, that's 12,000. Now some of the people get confused, okay? They think this is a, what do you say, an asset. No, this is not an asset. Understand, this is just presentation. We are not deducting prepaid rent actually. Here what are we doing? Rent minus rent only actually. It's just presentation. It's cost because of prepaid rent. That's why it's presented like this. In P&L only expenses will come over here, and here only incomes will come. Don't think this is an asset. This is not an asset. This is expense only. Rent minus rent only. Just for presentation purpose, to make you understand, it's written prepaid rent. Is that clear? Okay, fine. So that's the thing. And then in balance sheet, what will appear? In balance sheet, prepaid rent will appear 12,000. Why? Because we are over here at the end, and here in balance sheet we have to show in the next year we are going to receive benefit of rent of 12,000. Yeah, because we have prepaid it. So that's what we are showing in the balance sheet. Prepaid rent 12,000. Is that clear? Simple and straightforward. After this, what will happen? This second accounting period also over. Second year also over. Then the last year will start. Okay, third accounting period. And on the first day, what we have to do? Reversal entry. Yeah, this entry we pass now, 31st March 2025, this adjusting entry over here, this has to be reversed. So this will be reversed, exact opposite entry. Yeah, see, 1st April 2025, first day of new accounting period, third year, reversing entry will be passed. 12,000, 12,000, rent to prepaid rent. Here it was prepaid rent to rent. Now exact opposite, rent account debit to prepaid rent. You know now how reversal entry is passed. Okay, you know the logic also. What are we doing? Whatever is there in balance sheet, this is being cancelled off over here. It has debit balance, you are crediting it and cancelling it off. And then you're recording the rent. Because in the current accounting period, in the third year, there will not be any payment entry. Because already rent has been paid in the first year. Is that clear? Yeah? So rent is being recorded over there. So see here, no payment of rent. No entry. Yeah? So bookkeeper, what he will do? He will see this entry has been passed, rent account has been debited, right? So he will prepare the ledger account of rent, right? So it will be like this here, rent account, rent is increasing because of prepaid rent. Fine, this posting will go, and then the rent balance will hit where? Profit and loss. But first it will be transferred to trial balance over here, rent 12,000. Then what will happen? We will be at the year end. Right? The entire this thing will pass, no payment entry, nothing has happened because already everything is paid. So when we'll reach the year end, senior accountant will come, senior accountant will see the trial balance. In the third year I'm talking about, right? 12,000 is there. He will see and he will say that, okay, that's right. 12,000 is completely right, right? No adjustment, nothing is required. Adjusting entry is not required because rent expense of 12,000 in trial balance is completely right, completely correct. Okay, that's what senior accountant will say. And he'll prepare the financial statements directly. See here, rent account will be prepared. Rent account is increasing because of prepaid rent. Yeah, this entry has been considered. Third year, this entry, rent account has been debited because of prepaid rent. Rent account is getting debited. It has increased because of prepaid rent. So 12,000 on both the side, 12,000 minus 0, 12,000, which will hit profit and loss account. Okay, this will appear over here. No adjustment, nothing. Here there is no adjustment. Why? Because nothing is prepaid, nothing is outstanding. Okay, nothing is there. Simple, you will take it. Fine. In balance sheet also nothing will come because there is no prepaid anything. Fine. So no prepaid rent. Is that clear? Did you understand this? It was really simple and straightforward, isn't it? So this is the thing. Fine. This was the whole example. Okay. So I will upload in the PDF, then you can see properly. Okay. Here there are lots of different sheets, so it becomes a little bit difficult for you to see everything properly. But yeah, I will upload everything in the PDF. Okay. So I hope you have understood this. Now after this, what I have to explain is one more small concept is there. See here, the remaining concept is, I told you that senior accountant will pass the adjusting entry based on what has happened in the current year, what the bookkeeper or the junior accountants have done. And we have assumed in that entire example and everything that bookkeeper was recording what? Everything as an expense. He was debiting rent account to cash, isn't it? That's what he did. He just recorded rent to cash, 36,000. Entire thing was treated as an expense. But sometime bookkeeper can also do alternatively. 99% of the time this will happen. Okay. But if the bookkeeper is little bit proficient, or the systems are different in that company, then what will happen is he will do alternative accounting treatment. Okay, let me just show you. If the bookkeeper records the entire amount paid, whatever that 36,000 was paid now for 3 years, let's just say he record that entirely as prepaid expense, entirely as an asset, prepaid expense account debit to cash, not to expense, prepaid expense. If that's the case, then understand in prepaid expense account what will happen? 36,000 will go. In that 36,000, just imagine at the end of first accounting period, 12,000 will be the expense and 24,000 will be the prepaid expense. So when senior accountant will come, he will see the trial balance. He will come to know 36,000 is there as prepaid expense in trial balance. Okay. So what he will do? He will say this is not right. Prepaid expense is only 24,000. So he will reduce prepaid expense by how much? By 12,000. Reduce prepaid expense by the amount it has been consumed. Yeah. One accounting period has been passed. So 12,000 has been used up. Benefit has been taken up by the company by doing the operations in that office. Okay, by using up that space. Remaining 2 accounting periods, that 24,000 has not been used up. So that's right, prepaid expense. Okay, so only 12,000 he will reduce. And then that 12,000 will be recognized as an expense. This entry will be passed at the year end. Expense account debit 12,000 to prepaid expense 12,000. Is that clear? This is what will happen. This is the adjusting entry, and then it will be reversed. In the next accounting period, what will happen? Again, in trial balance, 24,000 will appear. Okay, in first 36,000 appeared, right? Then 24,000 prepaid expense will appear. Again, the senior accountant will see this is not right, right? 12,000 he will record as an expense, and 12,000, he will decrease from prepaid expense. Is that clear? He will reduce the prepaid expense as it gets used up, as it is consumed by the company. Fine. It's called as amortization of prepaid expense. Fine. This doesn't happen normally, but yeah, it can happen. Fine. Okay, but the main thing is, the main focus is that only, what we saw in our great example, right? Everything will be treated as an expense only. Fine. Bookkeeper will have limited knowledge. Everything will be debited to expense. But if this happens, then amortization of prepaid expense is required at the year ends and recognition of expense. Okay, that's the same thing. Then there is second accounting treatment. Second accounting treatment is bookkeeper may record correct bifurcation. Correct bifurcation means he is very proficient and he's handling the prepayment and accruals. In that case, he will correctly recognize everything. There will be no adjusting entry required to be passed by the senior accountant. Okay, what he will do? Expense account debit 12,000. Okay, he will come to know that in this current accounting period 12,000 prepaid expense will be used up. So 12,000 he will debit to expense account. Okay, it will be completely utilized. That will become expense of our company of this accounting period. He will come to know that, and he will debit, and then the remaining 24,000 he will debit to prepaid expense. Fine. He will correctly bifurcate how much is relating to current accounting period and how much is relating to future accounting period. In the beginning only he will do the calculation, and cash is credited because it is paid, it is decreasing, so that's normal. Fine.
but this happens very rarely. The thing that happens the most is this only. Okay, is that clear? So this was the whole concept. Fine. So these were the alternative accounting treatments that are done by the bookkeeper. I told you now, senior accountant doesn't just adjust the the accounting records. No, it is based on what the bookkeeper has done, what the history is, what has happened. Based on that only, there is the adjustment. Is that clear? So that's all for this video. I hope you have understood, and in the next video we have to understand accrued income. Fine. So far we have covered outstanding expense and prepaid expense. So that's all. See you in the next video. Bye.